Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of the Chicago soybean complex.
Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or on any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, Chicago soybeans. I think it's fair to say that this commodity has been frustrating me for a while. It was only when I looked at my longer term monthly charts that I was able to decipher a little of what's been going on and to give credit and warnings where they were due. So if we look at my longer term monthly charts, we can see that the action since at least as far back as the low seen in August last year till today has built a sideways action. I noticed this action 31 weeks ago and I'll expand on that shortly. But I just wish you to see that this sideways action is not done yet as to whether it is a halfway hesitation lower or a basing action for a move higher. Back to my daily charts. And also 31 weeks ago I highlighted a bright pink July 2024 to date rectangle pattern, which you can still see on my daily chart, and it's currently 962 to 1103. This pattern is still operational, even now, and we're now roughly midway between the pink upper trend line and the pink lower trend line. Near the pink lower trend line, we also have the unreconstructed bright green 2019 to date uptrend, currently at 974 and 3/4. And these supports helped explain the hesitation seen over late July and early August, before the market turned back up again. Now, there have been other patterns here, such as the mid-July break below the late April to mid-July expanding wedge pattern, as well as an earlier mentioned double top pattern, and a quite steep bear channel developing from late June to mid-August. However, these are no longer valid. The most recent pattern, or should I say possible pattern, is the mid-August to date potential head and shoulders top. We've formed the first shoulder and the head, sort of, and we're in the process of forming the second shoulder. But it is not a great looking pattern, though I still will give it some credit. The neckline, which is highlighted in dark blue on my daily chart, and it is a provisional neckline right now, is currently in the 1008 zone, a short distance below the market. In the immediate vicinity, we have the overhead gold long moving average, currently at 1035.5, which had been support last week but is now resistance. And the nearer to the market, is being tested at the moment, combination of the mauve medium moving average, currently 1031.5, and the green short medium moving average, currently 1029. Now, I value the mauve medium moving average, but I'm not sure about that green short medium moving average. Meanwhile, below the market, we have the 50% Fibonacci line of the June to August 2025 move at 1022, which has been successful at eroding the bearish incentive since mid-August, as well as further down the neckline extension, currently at 1005, of the late July to mid-September 2024 reverse head and shoulders bottom. After all that, well, we still seem to have little until the congestion down at the 990 zone. Chicago soybean meal. 27 weeks ago, I linked some of the early 2025 highs into a bright red, now broken downtrend, currently 267.60, though it's still valid in another form. And then also at the lows at the time into another purple broken lower trend line, currently at 276.80. And together, they made a January to August descending wedge pattern. This pattern was broken on the downside in late July, and in the process of breaking lower, the market made what looked like a small combined dark blue descending expanding wedge pattern, and at the same time a July to August reverse head and shoulders pattern. In mid-August, prices broke up through the dark blue neckline, which is currently at 283.70, of this combined neckline and upper trend line for the descending expanding wedge pattern, as well as up through the bright red upper trend line, the purple lower trend line, the green short medium moving average currently at 280.90, and now immediately overhead the mauve medium moving average, which is currently at 281.5. Prices climbed higher and entered a congestion zone formed between April and June 2020 and between 282 even to 300. And they were eventually stopped by the combination of the overhead gold long moving average, currently 292.20, and the 50% Fibonacci line for the whole of 2025 so far at 294.5. The rise did not manage to meet the primary target for any of the patterns, the reverse head and shoulders pattern nor the descending expanding wedge pattern, and these have now been retired. However, all this activity saw a new pattern emerge, and with the now broken but seemingly still valid bright red downtrend, the previously mentioned one, acting as a lower trend line this time in a mid-August to date, initially a bear channel, but now morphing into a descending wedge pattern. A new bright red mid-August to-date downtrend currently at 279.90, acting as the upper trend line. In truth, yesterday and again today, we are seeing the upper bright red trend line being tested. The question now is whether this attempt higher is a false break or not. Finally, this commentary would not be complete without my discussing the elephant in the room, or at least the elephant in the room which has stayed there throughout 2024 and also resonates now into 2025. And that is the annual key reversal seen here at the end of 2023. I said, and I'm afraid I have to repeat something I've now highlighted for 123 weeks, yes, well over 2 years, and I quote, and I only need to remind you once again of my words when I pointed out that Chicago soybean meal was about to have that rarest of patterns, an annual key reversal down. This duly came about at the end of 2023 and we've been living in the shadow of this pattern ever since, end of quote. I've also added ever since, and I quote again, if there is only one thing you take away from any of my musings, let it have been those words, end of quote. These last few weeks have shown once again that the shadow cast by that supremely significant pattern so long ago still darkens the skyline of this market today. Chicago soybean oil. In the past, and even now to a certain degree, the key pattern here had been the dark blue April to date ascending expanding wedge pattern. It's currently 54.49 to up off the top of my daily chart. However, and this is crucial, a crucial point to understand, it is not has been, it also is the dark blue upper trend line, the one that disappears out of the top of my daily chart, plus the lower bright green lower trend line below, currently at 50.14. These two made a similar ascending wedge pattern. So currently 50.14 for this to up off the top of my daily chart. Now I still have a conundrum as to, do I regard the dark blue trend lines as the definitive ascending wedge pattern, now broken, or do I look at the bright green uptrend below as the real and true lower trend line for the ascending expanding wedge pattern? Right now, I would regard the green lower trend line as the real deal, as we have, since the peak in late July, we've seen a new pattern emerge, another wedge pattern, this time a descending expanding wedge pattern, highlighted in red on my daily chart, currently 44.85 to 51.37. And this is all coming to a cusp. You see that? The breathing space between the green lower uptrend and the red downtrend line is becoming extremely constricted, such by the end of next week it will have all but disappeared. Thus we have a cusp, and something will have to give, and soon. At the same time all this is happening, we have other forces working on the market, notably the overhead green short medium moving average, currently 51.72, and the mauve medium moving average, currently 50.43. Then below, not tested as yet, but certainly influencing the market, the rising gold long moving average, currently at 49.17. It all makes for some potentially quite exciting and dangerous prospects for the immediate future.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.